Hi friends, today let us talk about a stock which has given solid returns to its shareholders over the past few years. A lakh of money invested in this company 10 years ago would have been worth 3 crores now with 300x returns, and a similar amount invested in October 2020 just a few years back would now be worth 22 lakhs. The company JBM Auto has been growing rapidly in the e-bus segment and currently owns the largest e-bus manufacturing facility in the world outside of China. The plant is located in the Delhi NCR region and has the capacity to produce 20,000 e-buses every year. This is nearly 4 times the initial 5,000 capacity plant being planned by its nearest competitor Olectra Greentech near Hyderabad. JBM Auto has an order book of 6,500 e-buses currently, and it plans to execute the same in the next 18 to 24 months. So why talk about an e-bus manufacturer now? The government has recently introduced a new scheme for EVs similar to the earlier FAME or Faster Adoption and Manufacturing of Electrical Vehicles scheme. This new initiative, called the PM E-Drive, directly benefits e-bus manufacturers and operators in several impactful ways. Let us explore why PM E-Drive could be a game changer for this industry. Firstly, the scheme has allocated 4,391 crores towards the procurement of e-buses. This is nearly 40% of the total 10,900 crores allocation done for this scheme. Given that public transportation, especially e-buses, is expected to be used by 95% of the Indian population at some point in their lives, the government aims to incentivize their adoption to the fullest extent possible. The circular issued by the government says a sum of 4,391 crores has been provided for the procurement of 14,028 e-buses by the state transport units or public transport agencies. The demand aggregation will be done by CESL in 9 cities with more than 40 lakh population, namely Delhi, Mumbai, Kolkata, Chennai, Ahmedabad, Surat, Bangalore, Pune and Hyderabad. Intercity and interstate e-buses will also be supported in consultation with states. JBM Auto, which currently holds 35 to 40% market share in the e-bus segment and over 1/3 share in the FAME category, stands to benefit directly from this move to procure 14,028 buses. Olectra Greentech has similar market share of 32% under FAME 2 scheme. The potential game changer for the e-bus industry, though, is the introduction of the Payment Security Mechanism or PSM with an allocation of 3,435 crores. In the previous model, e-buses were procured by a central agency like the CESL and then provided to state or city transport units under contracts with 2 payment components: a fixed payment spread over several years and a monthly payment based on the total kilometers traveled by the e-bus, with this monthly arrangement typically lasting about 10 to 12 years. However, a large number of state and city transport units have struggled financially and often default on these fixed and monthly payments. This led to reluctance among OEMs and operators to participate in e-bus tenders, resulting in fewer bids or no bids at all. With PSM, the central agency steps in when a transport unit defaults on its payments, ensuring that the OEMs and operators are paid on time. The agency then recovers the funds from the defaulting transport unit. The PSM scheme will support e-bus operators for up to 12 years from the date of deployment. The PSM has been a long-standing demand of OEMs and operators and is expected to attract more participants in e-bus contracts. This should drive innovation and competition, reducing bid amounts and ultimately lowering costs for the government. The PM E-Drive is holistic in nature. It also addresses the development of charging infrastructure, crucial for EV ecosystem to thrive and address range anxiety. An allocation of 2,000 crores has been made towards deploying 72,000 fast chargers, with 1,800 fast chargers specifically being set up for e-buses. Given these allocations made for procurement of 14,028 e-buses for the PSM and for the charging infrastructure, the e-bus manufacturing industry should benefit tremendously from the new PM E-Drive scheme. With such government support, the sales of e-buses could see a boost in coming years. Before we go into details of revenue and stock valuation for the firm, let us visit some interesting facts about JBM Auto. The company was established long ago in 1983 and specializes in auto components, tools and EV buses. It ships nearly 500,000 auto parts daily, and customers include big names in the automobile sector like Ashok Leyland, Bajaj Auto, Fiat, Ford, GM, Honda, JCB, Maruti, Renault, TVS, Toyota, Tata, Nissan, Volkswagen, Volvo, etc. The stock has rallied in recent years mainly because of the growth of its e-bus business. About 35% of its revenue comes from e-buses. They hold about 35 to 40% market share in the e-bus segment here in India. As I said earlier, they own a state-of-the-art manufacturing facility in the Delhi NCR region with an annual capacity of 20,000 e-buses, making it the largest e-bus manufacturing plant in the world outside of China. The plant utilizes best-in-class technology from Japan and Germany to produce top-quality products. They have about 9 EV buses in their portfolio, catering to diverse applications like school, tarmac or luxury coach, intercity, intracity, staff, etc. The company claims that their buses are 100% made to order and that more than 50% of the buses delivered are customized to the needs of the customer. They say their aim is to leave the customer not just satisfied but delighted as well. JBM Auto Management claims that unlike other manufacturers who may simply import batteries and power electronics, they handle 70 to 75% of the vehicle value addition and structure in-house. This enables them to maintain tight control over product quality and performance. The firm employs around 500 engineers in their R&D division dedicated to advancing their EV business. The company has positioned itself not just as an e-bus OEM but also as a complete EV ecosystem provider, offering a comprehensive suite of solutions which include not only the EV vehicle technology but also batteries, power electronics, EV fast charging and ultra fast charging infrastructure. Additionally, the company provides e-mobility services on a per kilometer basis for its customers, making it a one-stop solution for all electric mobility needs. Their e-bus customers include public transport units, private fleet operators and various government bodies, particularly under schemes like PM E-Drive, FAME2, PM E-Bus Seva and the Smart City Initiative. JBM Auto also aims to serve corporates and Fortune 500 companies in India and abroad that are keen on aligning with SDGs, that is Sustainable Development Goals, and ESG, that is Environmental, Social and Governance Standards. E-buses as compared with ICE vehicles help bring down the operating cost by 80 to 90% for its customers. While an ICE bus typically costs between 40 rupees to 60 rupees per kilometer to operate, e-buses run at just 6 to 8 rupees per kilometer with much lower maintenance expenses as well. While an e-bus can cost twice as much as its diesel counterpart, with government subsidies and cheaper fuel, they can be a highly cost-effective solution in the long run. Now let us look at the scale of JBM Auto's e-bus business and its revenue growth. The company has an order book of 6,500 e-buses to be delivered this year and the next. Each bus earns the company about 1.4 to 1.5 crores if it is an outright purchase. It's important to note that they also lease buses, and we will talk more about that later in this video. They claim that the total order book for the company, including the auto components and tools, is massive, about 45,000 crores. This is a 25,000 plus employees company which reported a revenue of 5,000 crores in fiscal year 2024, and their steady guidance for this fiscal, that is fiscal year 2025, has been 6,500 plus crores, a growth of 30%. The EBITDA margins are expected to be between 12 to 13%. While auto components business is growing 7 to 8% annually, the company says their OEM division for e-buses recorded a staggering 216% growth last year. In fiscal year 2024, 1,750 crores out of 5,000 crore revenue was EV division revenue. In fiscal year 2025, the company expects the EV revenues to jump to 3,000 crores. Net revenues from operations in fiscal year 2024 increased by nearly 30% to 5,009 crores compared to 3,857 crores in fiscal year 2023. While their auto components and tools business growth was flat or slightly negative, their OEM division's revenue increased to 1,741 crores against just 549 crores in fiscal year 2023. With a growth of 216%, OEM division practically was the sole contributor towards the 30% or 1200 crores of revenue increase year over year in fiscal year 2024. While the company delivered about 1000 e-buses in fiscal year 2024, it expects to deliver 2000 to 2500 buses in fiscal year 2025. It has already delivered about 500 to 600 e-buses in quarter 1 of this fiscal year. The e-bus industry in general and JBM management in particular claims their e-bus revenue will grow by a CAGR of 40 to 60% for the next 5 to 10 years. It is expected that by 2030, about 50 to 70% of the new buses will be electric. Hence, this growth projection of 40 to 50% in the e-bus business does not look unrealistic. The company is also looking to export its e-bus offerings and expects about 50% of its revenue from e-buses to come from the exports by 2030. They were the only Indian bus manufacturer to have their e-buses featured in the Buzzword Europe held in October 2023, the largest show for buses in the world. Given these numbers, let us look at the valuation of the stock based on its current and future revenue. The current PE for JBM Auto is 114, calculated by using the market capitalization of 22,145 crores and a net profit of 195 crores. It's based on the fiscal year 2024 revenue of 5,009 crores and a net profit of 194 crores. The JBM management has consistently projected a revenue of 6,500 crores or more for fiscal year 2025, with the OEM division expected to contribute about 3,000 crores and the auto components and tools division accounting for 3,500 crores. Assuming 40% growth for the OEM division and a flat revenue of 3,500 crores for the auto components and tools division, let us estimate the future revenue for this firm. In fiscal year 2025, the revenue is expected to be around 6,500 crores. In fiscal year 2026, the revenue would be 3,500 crores plus 3,000 crores into 1.4, which is 7,700 crores. The 1.4 comes from the 40% growth that we have assumed for the OEM division. Similarly, for fiscal year 2027, the revenue would be 9,380 crores. And for fiscal year 2028, the revenue would be 11,730 crores. Now let us look at the EBITDA and the net profit forecast for the next few years. The management has indicated that they expect an EBITDA margin of around 12% in the future. Assuming a net profit margin of 4%, we can estimate the company's future net profit as fiscal year 2025 6,500 crores into 0.04, which is 260 crores. For fiscal year 2026, it is 308 crores. For fiscal year 2027, it is 375 crores. And for fiscal year 2028, it is 469 crores. Using these net profit estimates, let us calculate the forward PE ratios for the upcoming years. For fiscal year 2025, the forward PE would be 22,145 crores of market cap divided by 260 crores of estimated profit, which is 85. For fiscal year 2026, the forward PE would be 72, and for fiscal year 2027, it is 59, and for fiscal year 2028, the forward PE would be 47.2. As you can see from these estimates, it may take about 2 to 3 years for JBM Auto's PE ratio to return to more reasonable levels. Therefore, significant stock returns are likely to be seen only in the next 3 to 4 years as earnings catch up with the current valuation. Now let us see some of the potential risks to this investment before we wrap up on this video. The debt is around 2,200 crores, which implies the company is funding its growth ambitions through debt. If they have invested heavily to build a facility which can manufacture 20,000 buses per year, they need to grow exponentially in the next few years in this business to recoup that investment. At present, their order book is 6,500 buses and they plan to roll out only about 2,500 buses this fiscal, suggesting that they still have a long way to go before they can achieve reasonable capacity utilization of this mega plant that they have invested money in. Their debt to EBITDA ratio is around 3.6, which is expected to come down drastically if they can achieve the claimed 40 to 50% growth every year in their EV business. Like its competitor Olectra Greentech, the domestic institutional investors and fund houses have largely ignored this stock. Their share is just 0.05%. The promoter share, however, is 65%, which is quite healthy. Under the PM eBus Seva scheme, the government is planning to deploy 40,000 to 50,000 eBuses over the next 5 years to help decarbonize the public transport and cut down on the urban air pollution. But a large part of this will likely happen through leasing of the buses and not direct sales. So instead of selling buses outright, the companies like JBM Auto and Olectra Greentech will be leasing them to public transport units or the PTUs. While the government will cover part of the upfront cost through subsidies, OEMs will still have to finance a significant portion themselves. Typically, subsidies take care of 30 to 50% of the total cost of the vehicle, and rest has to be financed by the OEMs. This means the lease buses will stay on the OEM's balance sheet as assets, and companies will likely need to take on some debt to cover those costs. As recently as a week ago, JBM Auto raised $100 million from the Asian Development Bank and the Asian Infrastructure Investment Bank. This debt will be used to supply and operate approximately 650 electric buses across several Indian states under the GCC model or the gross cost contract model, which is nothing but leasing of the buses to the public transport units. The payment security mechanism or PSM helps reduce some of the risks associated with leasing, particularly ensuring OEMs get paid on time, and it can also lower financing costs by allowing them to get better loan terms. However, the financial benefits or the revenue from an order book will take time to show up, since payments for leased buses come in regular installments over the contract period of about 10 to 12 years and not right away when the buses are delivered. So even if JBM Auto has an order book of 6,500 buses, it's important to note that the revenue won't come all at once. The money will be spread out over the lease term as the buses are deployed and they start operating. That's why it's good to avoid assuming that a bigger order book immediately translates into a big jump in revenue. My estimate is that about 60 to 70% of the eBus orders received from the public transport units sourced through the central agency will be leased vehicles and not outright purchases. This is the exact reason why I avoided calculating revenue based on the number of eBuses delivered in a year. To significantly boost the revenue by selling vehicles, JBM Auto needs to tap into the private and exports market, and only time will tell if it can succeed with the same. Based on these observations, I expect only modest returns on this stock in the next 2 to 3 years. It has been a multi-bagger stock for early investors, no doubt, but I'm not sure if someone is investing now, the returns will be anywhere close to the gains seen in the past. So folks, that's it for today. Don't take this as a stock recommendation advice. Do your own research before investing. Thanks for watching. Have a great day.